Microsoft is scheduled to report quarterly financial results after the markets close on January 29th, 2025. That has a lot of investors asking, should they buy Microsoft stock before earnings? I'll answer that question in this video, as well as preview what investors should look out for from Microsoft in the upcoming earnings release. So let's take a look at this interesting AI giant.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Microsoft last updated investors on October 30th, 2024, where they informed us that revenue increased by 16% to 65.6 billion. Surprisingly, operating income only increased by 14% to 30.6 billion. Usually, when Microsoft revenue grows by 16%, its operating income will grow by much more than that because there's significant operating leverage built into this business. Operating leverage means that when revenue goes up, costs don't go up by as much as revenue. Costs stay relatively flat. In fact, Microsoft's revenues and costs are not connected very strongly or not correlated very strongly. I give the example, if you want to think about a business that has costs that are strongly correlated to revenue, it's Uber, to give you an idea of how to think about operating leverage. When Uber's revenue goes up, its cost goes up because they have to pay the driver for each order. That's not the case with Microsoft. So it was surprising to see its cost go up by as much as it did, as revenue increased by 16%. But of course, the big driver of cost for Microsoft has been artificial intelligence and the acquisition of the gaming company that's now getting incorporated. It takes some time to digest a new acquisition and find those synergies, determine who your teams are going to be, which people you're going to unfortunately say goodbye to, and which people you're going to keep from the company you're acquiring. That takes some time. So it's okay. But I fully expect Microsoft to demonstrate leverage in the business in the upcoming quarter. Microsoft CEO said that AI-driven transformation is changing work artifacts, and workflow across every role, function, and business process. They are expanding their opportunity and winning new customers as they help them apply AI and tools to drive new growth and operating leverage. Roughly or nearly every business in the world is looking to incorporate artificial intelligence into their processes to either improve the customer performance or to lower cost. So to deliver the same amount of performance at lower cost or to deliver higher performance at the same cost. If you're not thinking about this in your business, you're probably falling behind. Microsoft is helping enterprises find ways to incorporate AI and improve processes. So the segment where Microsoft has its artificial intelligence is in the cloud business, and Microsoft cloud revenue of 39 billion was up 22% when the overall business was up only 16%. So its cloud business is growing faster than its overall business, which is what you'd like to see from Microsoft and from every company that operates in the cloud segment, really, including Amazon, Microsoft, Alphabet, and others. The cloud segment is a lucrative segment, as demonstrated by Amazon, which demonstrates operating margins in its cloud segment of roughly 30%, and it's growing faster than other business segments as well. So Microsoft participating in that category, gaining market share in that category, although it's still well behind Amazon in the cloud business. So another key thing I'll be looking out for from Microsoft is Windows, OEM, and device revenue. Now, this is where Microsoft generates revenue from selling its Windows operating system to original equipment manufacturers. And this is strongly correlated to PC sales or expected PC sales. And as you see here, this segment was relatively flat in the latest quarter, up only 2%. And all the data I'm seeing from companies that operate in this industry, including Intel, Micron, and today I was evaluating the results from Taiwan Semiconductor, which also sells into the personal computing industry, have all indicated that market is not recovering as expected. So almost all of last year, I had been talking about this anticipated replacement cycle for personal computers because so many people bought them in 2020 and 2021, and those computers are now aging and need replacement. You can't use those computers for work effectively unless you're doing very light work, browsing the internet, answering emails, etc. If you're using computers heavily like I am, I couldn't use a computer from 2020. And so these need to be upgraded, but they haven't been. And we haven't seen that replacement cycle. And it's getting more and more delayed as most industry forecasters were expecting that replacement cycle to start in the second half of 2024. That never happened. And so now we're getting the information I got from Taiwan Semiconductor suggests that, and Micron as well, suggests that it might be even slower than expected. Maybe not even in the first half of 2025. Maybe it's pushed out to the second half of 2025. So this is something I'm going to be very curious when I evaluate Microsoft results when they report their quarterly figures. And this is a very critical segment for Microsoft because it's an entry into its ecosystem. If you have the Windows operating system, you're more likely to have the Microsoft Office suite, subscribe to Microsoft 365, etc. And so the Windows operating system is a good gateway into its overall ecosystem. So Microsoft is now trading at a forward price to earnings of 28, which is right about in the middle where it has traded for according to this metric going back a couple of years. It's been more expensive and it's been cheaper, but this is right about the middle. I've talked about Microsoft over the last few months as being fairly valued. And then I also did a discounted cash flow model for Microsoft on January 1st, 2025. So it's fairly recent. And I came to the conclusion that the intrinsic value is around 447. Current market price is about 424. So I also call this about fairly valued because as you can see here, there's a lot of moving parts, a lot of estimates and assumptions. I try to have a bigger margin of safety when I'm doing this kind of calculation for a business. So a difference of just $23 on a $400 stock, I call that fairly priced, but fairly priced closer to being undervalued. And then I also say that when I'm looking at an excellent business, a best in class, best in category, strong competitive advantage, checking all the marks that I look for, I'm willing to pay a fair price for an excellent business. And so Microsoft is precisely that company. That's an excellent business that's trading at a fair price. So I have the stock rated as a buy, and I updated that recommendation today. But to answer the question, should you buy before earnings or after earnings? I don't see any compelling reason to argue for one way or the other. And when this happens, which happens often, I generally advise to do half of your purchase before earnings and half of your purchase after earnings if you're on the fence about that decision. If you don't mind missing out on the upside, if you don't mind missing out like on a 5% move higher or a 10% move higher, and you want to decrease your risk of a decrease in price, then you can wait and buy after earnings. So those are the two I would recommend. Either do half and half or wait until after earnings and then buy. But I do like this stock. I think it's fairly valued and it's an excellent business, which I always rate those as a buy. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.